GDP growth seen slowing to 6.1%. The Washington-based Institute of International Finance, IIF, sees Philippine economic growth slightly slowing down this year even as overall debt as a share to the economy declined last year. In its April 6th capital close report titled The EM Positioning Overhang, the IIF projected the Philippines' gross domestic product, GDP, to grow 6.1% this year, a slower pace than the three-year low expansion of 6.2% last year. The IIF's 2019 growth forecast for the Philippines was within the government's downgraded 6 to 7% target range. To recall, the cabinet level, Interagency Development Budget Coordination Committee, last month slashed its 2019 growth goal to 6 to 7% from 7 to 8% previously, taking into account the impact of the delayed implementation of the 2019 national budget and the prolonged dry spell due to El Nino. For 2020, the IIF expects the Philippine economy to expand by 6.2%, below the government's also downgraded 6.5–7.5% target for next year. Among the 7 emerging markets included in the IIF report, the Philippines was expected to post the third fastest growth rate this year, after India's 6.9% and China's 6.3%. The IIF projected Indonesia's GDP to grow 5.1% in 2019, Malaysia, 4.6%, South Korea, 2.6%, and Thailand, 3.7%. For next year, the IIF's GDP growth forecast for the Philippines matched China's 6.2%, and only behind India's 7.4%. In a separate April 2nd Global Debt Monitor report titled Slowdown in 2018, Cause or Trend, the IIF noted that the share of debt to GDP in the Philippines last year declined across all 4 sectors it measured. Households' debt as a share to GDP eased to 15.3% in 2018 from 15.9% in 2017. The debt-to ratio of non-financial corporates also declined to 61.5% last year from 62.8% in the previous year. Government debt also slightly decreased to 39.8% of GDP in 2018 from 2017, at 39.9%. As for the financial sector, the debt ratio went down to 11.2% of GDP last year from 11.5% in 2017. Among 10 Asian emerging markets that also included China, Hong Kong, India, Indonesia, Malaysia, Pakistan, South Korea, Singapore and Thailand, the Philippines' 2018 household debt ratio was the 3rd lowest, non-financial corporates, 6th lowest, government debt to 4th lowest, and of the financial sector, 4th lowest. According to its site, the IIF is the global association of the financial industry with nearly 450 members from asset managers, central banks, development lenders, commercial and investment banks, hedge funds, insurance firms, and sovereign wealth funds across 70 countries. Thank you for watching. Please subscribe.